Let's look at what happened overnight. Well, basically the Dow Jones Industrial Average hit its third straight record high, and it basically keeps on going higher. But on the chart it's looking more interesting though, because if we quickly have a look at my chart, you can see here that we are seeing some sort of shadow to the top. Depending which charts you look at, on my other charts I have a doji forming here. This isn't quite one, but still it is showing us a slowing of upside momentum potentially. So what I'll be looking for is whether we will come off a little bit perhaps and slide back below the 50,000 mark and then retest these previous highs we saw at the beginning of January and also towards the beginning of February. That's the really, really important support area around 49,650 or so, and to see whether we hold there or not. But basically, yes, we're making record highs, but we're slowing momentum. And that in itself is not negative, but what I would probably do is tighten my take profit orders and perhaps raise them to below the 24th of January low or something like that, because it is getting a slightly ahead of itself perhaps. And if you look at other indices like the Nasdaq, which basically suffered a bit as AI spending concerns linger. I mean, Alphabet yesterday fell 1.8% after a $20 billion bond sale, reinforcing investor sentiment with regards to investors being slightly worried about the heavy capital expenditure plans by major tech firms. And you can see here that the Nasdaq is slowing its upside move here as well, and is not looking as bullish as the Dow, because it didn't even manage to rise towards the 25,500 area here. So it's interesting to see what's going to happen here, whether we're going to see another down leg after this momentum slowdown in the days ahead, or whether we can just pile further gains on here and rise towards the record highs. Now, what I'm seeing at the moment looks more like what we saw at the beginning of January, a sort of slow loss of upside momentum, and then you get a corrective move down, and then you have to see whether we hold there and make new highs as we did in January, or whether we don't do that. Another interesting one, if you look at US markets, is the S&P 500, of course. And there, what we can see on the chart, I don't know what Angeline's got up here, because this chart doesn't seem to be working. Well, let's ignore it. Let's stay on me. Let's look at what the FTSE is doing, and let's look at the winners and losers. So opening bell, we just saw that. Once again, miners at the forefront. We've got Fresnillo up nearly 3%, Rio Tinto, Anglo-American, Endeavour, so lots of mining shares back in positive territory after the rise we saw yesterday in the gold price, now back above the psychological $5,000 per troy ounce mark. Silver also recovering slightly, and basically what we're seeing here is miners leading the way to the upside. And interestingly enough, we've got miners next week. I believe it's Antofagasta, then Glencore, then I've got which other ones? Antofagasta, Glencore, Anglo-American, and there is another one which I can't think of at the moment, which is also reporting next week. So I'm going to write an article on that on Friday, I believe. But yeah, interesting. We get lots of miners' results, our full year results, and we'll see whether we can keep up this bullish momentum there. And what else have we got there? 7 Trend. So 7 Trend is interesting because basically what we saw this morning is basically earnings, and I've got a little script here. Trading was in line with expectations, with momentum building in the first year of the new regulatory cycle, and basically that's why this stock has gone up. Then we've got National Grid, so more defensive stocks here, Sainsbury's, Marks and Spencer, so interesting. And then also some banks. I mean, that's interesting. Lloyds Bank, NatWest, again, looking positive after these sharp sell-offs we saw over the last few days, especially NatWest, because NatWest basically did a big merger, and that weighed on its share price here. What else can we see here? Can I see anything else which is of interest. Barrett Redrow had results out this morning, but I can't see anything on there. But I can see it as the biggest loser here, down 0.6.5%. So this was despite Barrett Redrow guidance being maintained and earnings being steady. I mean, if I look at the earnings here, first half completions rose 4.7% to 7,444 homes. The operating profit held also broadly flat at around £210 million, and the group remains on track for £100 million in cost synergies. So despite that, and despite full year guidance of around 17,200, 17,800 homes being maintained, the share price has come down. Now it's down 7%. So Barrett Redrow not doing well at all, as you can see here, probably because analysts expected better results than came out earlier this morning. What else have you got here? Some pharma stocks. Persimmon, which is interesting because that's more in line with Barrett Redrow. So here also slightly lower, and then BAE Systems also came down, as we can see here. AstraZeneca, another health and pharma company here. So these are the risers and fallers. Let's look back at the markets. Let's look at the US dollar, because that is interesting, because we saw the US dollar fall and we keep seeing the US dollar falling. Yesterday, basically, we had flat retail sales in December in the US, and we had expectations of 0.4% growth there. So that was disappointing, and it pushed the 10-year US Treasury yield down to 4.14%, and it also increased the odds of seeing an April Fed rate cut rise to around 39%, and we're still expecting June to be the first rate cut, but the odds of the April rate cut has risen because of that retail sales data, which was weak, and obviously that also had a negative effect on the US dollar. And if you can see here the US dollar index on this daily chart, we can see that basically we are on the 5th straight day of falling US dollar prices. And if you look at the euro, the opposite's happening here. We have further upside here, the euro rising against the US dollar, stalling slightly around 119.28 or so. You can see we've been trying to break through the last 3 days, but if that happens today, it is quite likely that we are heading back up again towards the highs seen around the 120 mark. And cable, which is interesting because of the political turmoil surrounding Sir Keir Starmer in the United Kingdom, seems to be dying down. So cable is actually rising further. Looks very similar here, as you can see, to the euro-dollar chart. Now, let's not forget, we've got non-farm payrolls later on today. This is the delayed non-farm payroll data from Friday because of the partial government shutdown a few weeks ago. So 1:30, we've got non-farm payrolls today. So everybody will be looking at that, and we'll see the impact of that on the US dollar, on US rate expectations, and also on stock markets. And we'll see whether we can see a fourth consecutive daily high for the Dow, or whether the S&P can catch up and also make a new record high or not. So that'll be interesting to see. Non-farm payrolls at 1:30, keep an eye on that. As I said, if you have any questions, please send them in. Otherwise, what we can see here on the cable chart, if we go back to that, is potentially an ABC zigzag correction. For those of you who know me, you know that I like these sort of three-legged correction after a strong move, because quite often that move then continues. And even if it doesn't, if you go long on the first break above the previous candle's high and you have a stop just below the last relative low, you have a small risk basically, and if you're right, you tend to get the same move you got into the pattern out of the pattern, and out of the pattern would be a break through that resistance line here. So we're talking about 137.30. Basically what I want to see is also a rise above that last relative high at 137.34 for us to then head higher. And if that were to happen, cable could go towards 140. So that is the approach I'm taking to this pattern here. And also, as you saw, I went long, or tried to go long, the Australian dollar versus the US dollar for my trade of the week, and we had the same pattern here, A, B, C, so zigzag correction, break through the resistance line, and then we've been rising, and we've nearly hit my upside target 71.45. Now I say I tried to go long here because I was for risk reward purposes, because there's a lot of resistance around 71.50, I wanted to have a 1.5 reward to risk ratio, and therefore I was hoping for slight retracement, and I didn't get quite in. We got to within 15 pips, but we didn't get into this trade, so that was a shame. But what else can we look at? Crypto, well, crypto, basically Bitcoin, still not doing well at all. Again, I don't know what's happening on Angeline's charts here, but they don't seem to be coming up for me. Let me just try this some other way and look at that. But basically, Bitcoin remaining below $70,000, try to bounce back, and yeah, I don't know what's wrong with her charts, but sorry about that. I'm using her platform because of these gains, again, the rises and fallers in the UK. But we can look at the chart again. You can see here Bitcoin continuing to come off, basically falling for the third consecutive day, remaining below that 70,000 mark, and trading around 67,000 at the moment. And all the cryptocurrencies look pretty bad with regards to the trends. As you can see here, they're clearly pointing down. And I know we've had a nice surge higher last Friday, but the trend is your friend, and it's keeling over once again towards the downside. So just be aware of that. Now, since I haven't got any other questions from anyone, and since there isn't any other data out except later on today at 3:30 p.m. the EIA storage data for oil, so that could be interesting. If we look at the oil price, let's have a look at that. Let's have a look at WTI, because that has been rising over the last few days, and we discussed it yesterday with Angeline, as you know, and I was talking about this triangle forming, and look what's happening now. Can you see here, we're breaking out of the triangle as I was expecting to happen yesterday. So what is the triangle? Basically, it is the high from the 29th of January connected up with the 4th of February high, and on the flip side, you've got the low of the 3rd of February that you're connecting with the low here of the 9th of February, and you've got this triangle forming. And you can see here it's a continuation triangle because it's just a normal triangle. It's not an ascending one where you've got a horizontal line at the bottom, or a descending one where you've got a horizontal line at the top. This is just a normal symmetrical triangle, and we are breaking out of it. And you would expect the distance from the lowest point of that triangle at the breakout point to be moved to the upside. So basically what we're seeing here on this chart to do with WTI is a possible move back towards $68 or so on this triangle breakout. So if you want to trade a signal like that, obviously I'm not giving any trading advice here, you could go long around current levels and probably have a stop loss below the low seen on the 3rd of February, and that was around I think $61, just below there, and then have an upside target around $68, $69. Why? Because can you see here, we recently failed in January just above the highs we saw back in September, and also at the end of September of last year. And once we move above there, the next upside target is this high here from the mid-July high. We're talking $48.50, and then also this high from the 30th of July high around $69 or $70. So it's quite possible that the oil price is actually rising further as geopolitical tensions are actually diminishing. President Trump has not, as many expected, invaded Iran. The talks haven't really gone anywhere that were supposed to happen between Iran and the US. And despite these geopolitical tensions slightly diminishing, you have a strong oil price, and that is still the case at the moment. And technically speaking, as I say, it looks more bullish than bearish in the short term. So I think we've covered more or less everything. We've looked at US yields a little bit. We looked at the data. Non-farm payrolls, very, very important today at 1:30. So keep an eye out for those. and see what the reaction will be on the Dow. Are we going to see a fourth consecutive day of record highs? Probably in that case heading towards 50,100. I've got a 161.8 or 261.8 Fibonacci extension target, slightly above current record highs, so that's a possibility. But if we are seeing this doji formation I just pointed to you earlier on, and if we see a reversal, then basically, watch the area around the 49,600. So I showed you earlier on the early February and early January highs, and see whether we can find support there or not. And apart from that, there isn't really much going on. Except for at 3:30 the EIA data. Now, I can't see any questions, but I'm just going to make sure the gallery has me properly queued up here. Can I see the questions? Do you have any? No, they don't seem to have any. So thanks for watching, and I think Angelina's back. No, it's going to be Chris and I tomorrow. See you tomorrow. Good luck with your trading.